So, folks, what an action-packed week in Bitcoin and in the stock market. A lot of things are happening, a lot of events influencing where the stock market and Bitcoin is going. And as usual, this is Pablo He-Man coming to you from, can you guess where I am? This is, I'm actually, this time at Kuala Lumpur, Malaysia. As I've been saying, I'm investigating a lot of the places that I see on the in Southeast Asia, in the Middle East, that I think will be important for growth as the US and China decouples. So I'm personally investigating a lot of those places. You see a lot of them, more of them, in my videos. Okay, here we go. Bitcoin. If you're in my Discord or if you're on my Twitter, I've been making some warnings. I've been saying lately that watch out for a pullback to around, say, 21.5 area. That's because we have this massive downward channel that Bitcoin's going down in, and we see that basically, usually, I think it has broken through, should continue up, but it's likely we'll get a pullback first, some sort of retest, and that would sit around 21.4, 21.5, might go even lower and bounce up. The couple of the reasons why I said watch out for a pullback is, one, in my Discord, I said this is a top and tail we had 3 or 4 days ago. Failed to punch up 24, closes like this, which is kind of not great after this much of a run up. Look at this. We saw this last time as well. After a decent run up, top and tail, boom, goes down, right? And it's top and tail on a large volume. After another crazy run up, another top and tail, right? Looks like it's about to do a test downwards. Could bounce first and give a final retest of around low 24K and then go down, or it might just go down without any rebounds. But essentially, I am looking for a pullback, whether it does a small bounce here or not. Okay, now here also we see same thing. Big run up, say here, big run up, top and tail, down, top and tail, down, top and tail, down, top and tail, but punches once more, top and tail, and then bang, down. So again, here, same thing. We could have one top and tail and two, then go down, or just this one top and tail and then down. It's so, both scenarios are possible, but I am looking for a ray trace back here. Overall, I am thinking stocks continue up. Why is that? Because, because last time we spoke on these long videos, folks in my Discord knew that I was looking for if you watch this last video, folks knew that over the next few month, I stress, I'm looking for a possible bounce to as high as 460, and even 480 is possible on the Spider, which is SP 500 ETF. So kind of what I would call a big bounce, or you might even call it a small bull market. But with a recession likely to come, and then boom, for stocks and Bitcoin to retest down for a double bottom, might even go even lower. Why is that? I will show you guys what I mean. Just in the short term here, in the very short term, we can see I made the video around here on the 22nd. Yeah, actually on the 22nd. So after this Friday, when a stock market was here, I said, I'm not sure if it goes up or down immediately, but in the next few weeks, I imagine it would punch up because of the signal I gave last time. And today, it looks like, again, we have a topping tail, kind of a topping tail here. A big rejection from this level, around the 415 level, that has always been on my charts. So we might be looking at a pullback. Why we're seeing pullbacks like this across the board? Well, let's have a look at the US dollar. As I said in my Discord. By the way, this videos like these go to my Discord first, and usually you can see the date here is Monday, 6th of Feb, midday in Malaysian time. But I might be at somewhere else in a few days. But the point is, these videos go to my Discord first, and then after a couple of days, I release it to the general public. But there's always going to be some wankers who never even watch basic videos like this and take in basic information, and they're like, "Ooh, Pablo, you didn't call this, Pablo." Oh, fucking, the video was 2 days old by the time you watched it, dickhead. Anyways, US dollar. So people in my Discord know, and I've written about this in Twitter and some videos as well, that I've been expecting a bounce. I was long the US dollar around 103.5, short the euro around 107.8-ish, and it went down beyond my expectations, and I kept on saying, I think this is the last stand around 101.5.3 area, and it didn't disappoint. Basically, we came out with a big jobs number, and boom, it's rocketed up. First resistance, big pump. First resistance, it would be around 103.5, but eventually I think US dollar could punch to as high as 105.6 area. If so, and it can rest above this horizontal support zone and above this rising trend line. So look at this. If the US dollar breaks down and can bounce up, can rest here, then we'll have the opportunity for another big bounce up. So this was a trend line that I drew before for a way back a couple of months ago, thinking that it would bounce here and then a double top, something like that. I don't know if it's going to be a double top, but it could bounce up to 108, 109 area. 105 will be a minimum target, 105.6. Why am I talking about the US dollar? People in my Discord would know this. US dollar is basically the king. They call it a king dollar. And basically when the US dollar goes down like we just saw, then basically things like the stock market goes up. See, when US dollar is going down, and then the stock market goes up. When US dollar just bounced, like we just saw a couple of days ago, stock market tanks, pulls back. And where is Bitcoin? Bitcoin also pulls back. As the US dollar was falling the last couple of months, Bitcoin was rising. So basically, if the US dollar gets to 105.5.6 area, then we would see Bitcoin pull back to low 21s, maybe even 20-ish area. If we see the US dollar get up to 108, 109, then we could easily see Bitcoin get back to this 18K area, which I cannot rule out, and do and then maybe bounce up. So it'd be something like a head and shoulders pattern if that did happen on the US dollar. So we have the shoulder here down to 108. We have the head down here, and then another shoulder down here, and then pop back up. So overall, I am still looking for stocks and Bitcoin to pop up higher. The reason why is because of this. See, last video we did, I was talking about there are these 10-day advanced decline signals that shows the breadth of the market, and it's been quite accurate. If you want to know about this, then check out my last video, where the call has been pretty accurate so far, where whenever this signal of very wide breadth happens on the New York Stock Exchange, basically it's picked a nice sort of a mini bull or major bull market in the stock market for a long time, right? And we see it working. After that signal comes out, it came out around the 12th or 13th of January. So that means 1 month later, usually we're in the positive zone. So by 12th of Feb, we're up. 3 months later, by 12th of April, market should be up. By 12th of July, market should be up. 12 months later, by 12th of January 2024, market should be up. And on, the median or average is up 5% a month later, 9% 3 months later, 14 months 6 months later, and 18% 12 months later. But however, I do say in my Discord that this has been a very, very unusual year. When does this signal stop working? Well, it stops working, see here in this period between 1929 to 1947. It gave all these signals and it didn't work. But it worked all this time, right? Now, the question is, are we still in this kind of period where the signal works almost every time? Or have we entered this kind of period where the signal doesn't really work? So, unfortunately, we can't really tell. And last time I said my confidence in this signal is not 99%, 92% like it has been. It's 92% accurate. It's more like 60 to 70% accurate. More like 60 to 70% accurate in my mind, because what if we're in this period? What if the economic conditions we're in right now is like back in this period, which means signal won't work for 6 months or 12 months. That is entirely possible. If that is the case, then basically what I would say is this. Not that. Basically what I would say is that just keep in mind that the economic conditions we're in right now is so different, with stagflation, with high government debt, from the last 40 years, from the last 60, 70 years, that this signal might stop working. We can't be 92% sure like we were in the past. If that is the case, then then basically it tells us something really, really bad. Let's say if in 1 month time, in 3 months time, this signal does not hit, let's say here. If say because usually works, like mostly works after 1 month, and mostly works after 3 months, and works almost every time after 6 months. If in 1 month time, 3 month time, 6 month time, if it doesn't work, right, then we can maybe ask ourselves, then maybe our economic conditions are no longer like the last 70 or so years. Maybe we're kind of like here. If that's the case, then we're headed for like a pretty bad, rough market conditions for at least 10 years, as we saw here. So if it works, then we should have at least a mini bull market. If it doesn't work, then basically we're back into the similar conditions to 1930s to 1947, which which would mean, well, what happened back then was a Great Depression, which I'm not saying is going to happen, but we could have a mild depression or a really severe recession. Okay, so just keep that signal in mind. Now, the other thing I want to talk to folks about is the fact that we've had this really big jobs number come out. That surprised everyone. And so the key question is, are we in a recession or not in a recession? Because essentially, as what I've been saying all along is essentially, this is what happened in why don't we just put on the federal funds rate? Fed funds rate, okay, new price scale. Everyone's big question to me is, Pablo, are we going back to 15K or not? Okay, this is what happened. This green line you see is interest rates. Interest rates are rising like it is right now. Then stock market and Bitcoin, well, mostly Bitcoin, are dumping, crashes, and then see how it goes flat. The Fed pauses, Bitcoin bottoms and rises, right? This is where we are right now, kind of, right? This is kind of where we are right now with Bitcoin. And then as they cut rates, interest rates coming down, everyone's cheering, but that's actually when Bitcoin topped. And where they're cutting rates really quickly because recession's happening, boom, Bitcoin crashes, also that's COVID as well. But it also means the economy is crashing. And we see this is almost a double bottom, whatever you want to call it. You want to call it a higher bottom, double bottom, whatever. But it can actually go to a lower bottom, right? Depends on how bad the situation is with recession, how quickly the Fed reacts. So the key for me, as I've been stressing in my Discord, is that are we in a recession this time or not? Same thing, I'm expecting a big bounce out of Bitcoin. 32K is even possible, maybe even into the 40s. But however, after this bounce, will we come down and do a double bottom, or is it a higher bottom, or even a lower bottom? Okay, so let's look at the data. People are saying, okay, jobs numbers are so positive. How can we be in a recession? Because this is the way to understand the economy. I keep on stressing in my Discord, it's called HOPE, H-O-P-E, which means H for housing, O for orders, new orders, P for profits, and E for employment, which means basically the housing market goes first, right? We've seen housing market tank, like really badly. New orders is measured by, purchasing managers, indicator, PMI, which is also tanking easily below 50. Profits, we've just seen a few days ago, Apple, Google, and Amazon all report bad earnings. So this is happening as well. The last to go is most lagging part of the economy is employment. Job numbers are still strong, but we've had, see, on this side is the number of months, say month, right? This is 0 is where recession starts, and this is the countdown to recession, and this is number of month we are into recession. So basically, profits are already going bad, and time equals 0. This is going backwards, this is going plus. Next, we're going to see some positive employment growth become negative employment growth, right? These are the ones who react first. Housing, new orders, and then reacts next to the profits. That's where we are. Profits are going down. Last to react is employment. So we're kind of right on track if we are expecting a recession. How does every other recession in history play out? Let's look at some real numbers. So here is 2000, the last 30 years of recessions, and of the Federal Reserve hiking cycle from 1995, 2000, 2006, 2018. So here we go. This dotted orange line is is when the Fed pauses, which is what the market thinks is happening now to Fed funds rate. They think the Fed is going to pause sometime in the next 1 or 2 meetings. Okay, let's see. This top pane is the federal funds rate, right? Say we're about here right now, actually, because people think, well, it's one more, and then we pause. So we're probably here right now, but this is compared to 1995. And here is the US 10-year yield. When yields fall, usually stocks tend to go up because, it's a lower risk-free rate. The PE ratio goes higher when yields fall. Anyways, you can look that up. SP 500, yields fall, SP 500 goes on a major run, right? If there's no recession, it doesn't look back, then it just keeps on running. That's the no recession scenario. We could be kind of like here right now, right? Because we've had 1, 2, 3 bottoms and then keep on running. If there's no recession, I think it's something like a 10% chance. Look at the E2000. They are hiking rates, and then they pause. 10-year yield starts to fall again every time. 10-year yield starts falling, and the stock market bounces. But this time, the rally only lasts 3 months when they pause. After they pause, the stock market only rallies 3 months, then boom, major crash. That's the dot-com bubble crash. 2006 to 2009, which is the GFC, right? The Great Financial Crisis, global financial crisis. Fed pivots, but it's 18 months. It took 18 months before recession started, because remember, it took till 2008, 2009. That's why, remember in that movie, The Big Short, Michael Burry famously shorted the U.S. federal mortgage-backed bonds. And remember, in that whole movie, he was frustrated. It took a lot of waiting and took a lot of people disbelieving in him until it finally became proven to be correct, because it took 18 months before recession hit. So Fed pauses here in late 2006. Yields, 10-year yields go down, stock market goes up, and then 18 months later, Fed starts cutting rates. Shit, the economy is going bad. Yields start falling again. Stock market crashes. And that's the great GFC of 2009. Okay, 2018 example, we just looked at on the Bitcoin chart, but I'll show it again. So basically, they pause here in late 2018. Yields start falling. No recession, and the market goes up, and up. Then, arguably, COVID came along, and COVID was already showing the weakness in the economy, there was already a recession, and boom, we saw stocks crash, and there was a double bottom in Bitcoin, or you might call it a slightly higher bottom in Bitcoin. So let's look even back further in history. Let's look at 1979, 1980. This is the last time stagflation kind of happened. Okay, Fed pauses, right, because they think they've killed inflation, and 10-year yields go down, stock market goes up, but oh no, inflation comes back. This is what we have to watch out for. This is 1979, 1980. This is the period I've been comparing the most to our current example, because in the 70s we had stagflation. They couldn't kill. Look at this. They've pumped up interest rates once, paused, came back down because the economy was going bad. Then they pumped it up again aggressively. Why did they do that? Because inflation came back. That's what we have to watch out for, right? So US 10-year yields got pumped up again, and that's when stock market came crashing down again, and a double bottom, and it's a lower bottom as well. That could happen this time. Late 1980s, Fed pauses, yields go down, stock market again bounces, but then goes down or sideways. 1984, there is no recession, Fed pauses, cuts rates aggressively, 10-year yields goes down, stock market goes up. 1989, Fed pauses, 10-year yields go down, stock market goes up. Right. Now, we've seen a number of examples here. Where basically sometimes there's a recession, sometimes there isn't a recession. It all depends on whether there is a recession or not. And what happens is, but almost every time we've seen, when the Fed pauses, stock markets bounce up, right? So that confirms our earlier 10-day breadth signal on the New York Stock Exchange, right? So, which is why I think as the Fed pauses, we should get a bounce up, what I call in my Discord a big bounce or a small bull market in the stock market. And that means for crypto, for Bitcoin, it should bounce up as well. So 28 to 32K is a standard 28 to 32K is a minimum kind of standard expectation for where Bitcoin goes, can even get into the 40s. So that's because, we see here, every time, right, we've looked at the last 8 bear markets, every time the Fed pauses, stock markets swing up. Fed pauses, stock market swings up, at least for 3 months, right? Then it goes sideways or down, or it can be actually a big swing. Let's see, right? 95, E2000, 2006, 2018, every time the Fed pauses, right? Stock market swings up, swings up, swings up, swings up. Although the last 3, the stock market has come crashing down, major crash in 2009, and big crash in 2018 as well. So it all comes down to guessing whether we're going to have a recession or not. So, and remember what I said about hope, H-O-P-E, what's going to happen to employment. So here is hope, H-O-P-E. What's H? H is housing. What's E in hope is employment, jobs, right? So here is, see the dark blue line is unemployment, right? Unemployment is really low right now, but will it go up and give us a recession confirmed? Now, the gray line, the lighter line, is home builder sentiment. Home builder sentiment, and it's basically, it's inverted. So when we see it rises like this, it's actually falling because, right, the index has gone from say on the left-hand side, from about 80 down to about 25. That's the home builder sentiment. It's actually really low right now. This is the inverted chart. So we're using it as a leading indicator. Remember, HOPE. H comes first and the earliest. When the gray one falls, right, the blue one, which is unemployment, should follow and go up. We've seen this happen a number of times in the past. This is, again, 1980s, right? Home builders sentiment crashes, unemployment goes up, and this red area is recession. Gray area goes up, blue area, which is unemployment, follows, and recession. Gray area again is leading, goes up, blue area follows, and again, this is recession of GFC of 2009, 2010. Again, we see right now. Look at the times when the gray line, which is home builder sentiment, pushes up. Major push up here, recession. Kind of small push up here, and unemployment follows. Major push up here, unemployment follows, recession. Major up push up here, and unemployment follows, and you have recession. Major push up here, and unemployment follows. This is the COVID recession, which is very short, of course, only lasts like 2 weeks. Major push up here. This is about as big of a push up, if you look at it measuring from the bottom, as any one of these. And the Fed is still hiking rates because jobs are still strong. Inflation is still not quite down yet, so they're still hiking rates. Okay, if we enlarge this area, this is what it looks like. This gray line came from all the way from 90, and it's up to 30-ish area now. So the confidence of home builders has fallen from 90 to 30, and the blue line you think would follow. If the blue line followed, it would come to around unemployment claims would go from where we are right now, which is just hovering around 200, to around 500,000 people, or 450, 460,000 people claiming unemployment on a weekly basis. Okay. Again, for the short term, I think we should be a little bit careful of a pullback in both stocks and in the short term. We should be careful of a pullback in both stocks and crypto. Bitcoin, as I've said before, it's because we have the US dollar, and it looks like the US dollar is bouncing, right? If US dollar bounces up, stock market and Bitcoin crypto tends to pull back, and that applies to the China tech stocks as well. For the guys in my Discord, I've been talking about the Chinese tech stocks a lot. So China tech stocks are actually leading this run right now. That would be one of the first things to pull back, and I think, in fact, it already has. It's led the bull run up, and it's leading the pullback down. So let's see, where are we? Yeah, now we're seeing this is just a measure of smart money, dumb money. Dumb money confidence is extremely high right now. Smart money confidence is extremely low right now. So we're looking for some sort of pullback. It might have a little more push up, right? The SP 500 might have a little bit more push up before coming down. But within the next, say, 2 weeks to 2 months, the move is down rather than, let's say the next 2 weeks, the move should be down. Maybe a little bit more push up and then down. Not expecting it to take out the 3,500 low on the SP 500, maybe to here, right? But probably below 4,000 or close to 4,000. Pull back, then go up. So here's another way of looking at it. HOPE. Home as hope is HOPE. H stands for housing. P stands for profits, earnings per share, right? That's profits. So what happens is basically the blue line is the SP 500. Usually in a recession, basically stock prices will start falling, And that's when stocks bottom, right, and it keeps going, bounces up, earnings reach their lows usually 6 to 9 months later. So the green line keeps going down. What we're seeing right now is earnings have topped out. Earnings, as we know, is already going down. We just saw, as I said at the start of the video, Amazon, Google, Apple, some of the biggest companies in the US and SP 500 have really bad earnings report that shocked that surprised the Wall Street community. So we're already kind of in this phase, right? Prices tends to, then in a recession crash, would fall, and then it would bottom, whilst earnings keeps going down for another 6 to 9 months, but equities, stock prices have recovered already. That's for later in the bear market, if it does happen. Here, another way of looking at it. These blue lines are when the stock market bottoms, right? That's roughly when Bitcoin and cryptos would bottom. I would think crypto and Bitcoin probably bottoms like a week or a month earlier, but that's roughly where stock markets bottom, right? And this is the Fed funds rate. Look at this. I've said this before, and I'll just show you guys the charts again. Starting from the stagflation days of the 70s, it's when the Fed is cutting rates, when rates are falling aggressively. That's when the market bottoms. When the Fed is cutting rates, market bottoms, right? I guess this is a little bit different, right? It was still cutting rates a little bit, market bottoms. Here, major cutting rates, market bottoms. Cutting rates, market bottoms. Cutting rates, market bottoms. Cutting rates, market bottoms. So what is the Fed doing right now? Fed is still hiking rates, right? And we're about to go flat, go sideways, go sideways, then cut, go sideways, pause, then cut, pause, then cut, pause, then cut. So in the coming month, we're expecting a big bounce in stock market, because we've shown that a number of times, right? When the Fed is pausing, we're expecting a swing up in the stock market, right? Could be a 3-month swing, or could be a big swing like for years if there is no recession. That's why we're looking at this. I hope this is all getting through to you guys, because nothing is like 100% prediction. You know, people expect me to say, in 6 months, 9 months, we have major recession and US stocks crash, Bitcoin's going to crash to 8K, whatever. I can tell you the probabilities of that happening. I would say something like that, a second bottom, a double bottom in Bitcoin, in the stocks, or even a lower bottom, is a higher probability event, right? Because I do expect the recession to be coming. And if a recession is coming, then stock market bottoms when the Federal Reserve is cutting rates, not when it's about to pause, right? Not when it's about to pause. Compared to the past cycles, we're kind of here now. We're kind of here. Here is when they're raising, about to pause. See, we're raising, about to pause. We're like here now. It takes some time, 6, 9, 12 months before markets go crash, right, and hit a bottom. Okay, yeah. Here's another way of looking at it. Usually the ISM, that's HOPE, HOPE, stands for housing, new orders, employment, and earned profit, right? HOPE. So this is the ISM, that's new orders. This is unemployment rate, or jobs, employment. This is earnings per share, or measures earnings. Usually we looked at each, since 1949, since the Second World War, we look at each one of these, and when SP 500 bottomed, the day when the SP 500 bottomed, or the month when the SP 500 bottomed, right? That's why they call the SP 500 trough date. How bad was the PMI? How bad was unemployment? How bad was earnings? And on average, PMI was at 43. Right now, PMI still just above. It's still above that. And this data is a little bit old. PMI still coming just under 50. Unemployment is 1.3% higher. Right now, unemployment It was 0.2% higher a couple of months ago. Right now, it's actually unchanged. So employment has been strong. Corporate profits is usually down 10 to 11%. But right now, on average, it's only down about 4 to 5%. So we're not quite there yet with a bad recession. The economy should weaken more in the coming month, in 3, 6, 12 months, and Fed starts cutting rates, then we have that big crash. Here's another one. No bear market has ever ended before the associated recession had begun. So we need to see the black line is what they call a recession. The green is a bear market. So since 1929, right? The recession starts, the black line, the green part is the bear market, right? You can see basically we need to see the black line, then we see the green area end. The black line is when recession is declared, right? So we needed recession to be declared. Right now, people are not 100% sure recession has started or not. And we can see 1968, 87, 2022, we have no recessions yet. No recession has been declared yet, but it doesn't mean it won't happen. We could have a black line somewhere around here, start, and then we have the green line somewhere end around there, looking at all the past examples. But we need the recession to be declared first. So in other words, it is all about the recession. It is all about the recession. Again, HOPE. O stands for orders, which is PMI, Purchasing Managers Indicator Index, right? E is for earnings, HOPE, HOPE. Here's PMI, which is new orders and earnings, EPS. Now, this is the 2008. We use that as an example, and we see that the yellow line is yellow line is ISM PMI, which is new orders. New orders start trending down, which is where we're at right now. Hits 50 and then starts going down, which is where we're at right now, and then crashes, right? When that crashes, it signals the economy's bad and company profits are bad. So therefore, earnings already were trending down, and then it crashes, right? This is August 2008. Now earnings crashes. We're kind of maybe here because it's been trending down, maybe here, right? But remember, these are like 3 months. Each one of these are like 3 months. So in 3, 6, maybe 12 months, we have possibly a major crash, and that is when you have HOP, housing's already crashed. New O for orders, new orders crash, and the earnings crash, and that's when the mega stock market crash comes. This is where we are right now. So we see the new orders already going down. We see earnings kind of. This is like a 1 month old chart. If we were to update what happened lately, it's gone down to here as well. So housing's already gone down, right? Housing's down a lot right now. So we're seeing HOP already going down. Employment still staying strong. So that's why I say we're still on track. It's still possible for a recession. It's still possible for a big recession. In fact, I just want to show you guys this. Look at this. The headlines are telling us, the economists are telling us, oh, don't worry, guys. Soft landing is possible for the US economy. Soft landing. Oh, when was this headline? 2007. What happened in 2008? Major crash, right? Major crash, the GFC. Soft landing ahead for US economy. When was this written? 2007, right? 2007. Survey, IMF survey of all the top economists, they're saying soft landing, but then major crash, right? Fed chairman says US economy, soft landing, then major crash. So overall, I want to tell you guys that this is what's tricky about the markets. You can never say with 100% certainty, although I am leaning, as you guys know, I think that it's 10% chance we get a soft, I've said this for a long time, 10% chance for a soft landing. 90% of the remaining 90% chance, 50% is for a recession and 40% for something worse than a recession, which means a mild depression or even a something worse, something like stagflation. So right now we're at that point where remember we saw before, markets go sideways, markets go, Fed pauses and stock markets bounce. When stock markets bounce, it almost always happens, then Bitcoin and crypto are going to bounce as well. It's going to be a big bounce over the next few months, over the next few days, week or two. I think US dollar bounces. That's going to pull back stocks and crypto in the next week or two, or even 3 weeks, right? So remember the timeline. And but eventually, in say 3 months from now, more likely 6 to 9 to 12 months from now, we have the economy really tanking. According to what the numbers we've seen so far, recession comes, and then boom, you have the big recession hits. Could be a mild recession, could be a really bad recession, could be really bad stagflation hits in say 3 to 6 to 12 months from now, and we have stocks crash again, and we have Bitcoin and crypto will follow as well. So keep those things in mind. It's all about probabilities. Okay, thank you guys. I'll be coming to you from a different part of the world next time. Remember, I am investing into a lot of these economies: China, Hong Kong, Southeast Asia, Middle East. I hope you can broaden your investment horizon as well, and follow me on this journey. Thank you for your time. Cheers, guys. Bye-bye.